They don't care about the relationship between real interest rates and the price of gold. They don't care about the strong dollar. They don't care about any of this stuff. They don't care about these correlations, right? They just...
In today's financial spotlight, we're uncovering a seismic shift in the silver market. Imagine silver prices smashing through the $308 barrier. John Rubino, a renowned financial analyst, claims this isn't just possible, it's imminent. Stay tuned as we dive into how this could unfold, uncovering the forces behind the silver surge and why your wallet might feel a lot heavier very soon. Let's start with the basics. Recently, silver has been displaying signs of a bullish uprising, dancing around the $29 mark with potential to break higher. But what's driving this surge? It's not just everyday fluctuations. There's a pattern emerging that suggests a significant rise. Technical charts have hinted at a breakout point, and if you're watching the market, this could be the cue you've been waiting for to perhaps consider your investment strategy. Stay tuned, because understanding the why behind this movement is crucial, and we're breaking it down next. Diving deeper into the mechanics behind silver's potential ascent, we find ourselves looking at a technical formation known as the bull flag pattern. For those new to trading charts, a bull flag forms during a strong upward market move followed by a period of consolidation. This pattern resembles a flag on a pole. Historically, this setup has often preceded explosive upward movements. The relevance here. Silver's recent chart exhibits this exact pattern, suggesting that what comes next could be a sharp rise in prices. Now, why is this significant? This pattern isn't just a trivial line on a graph. It represents strong buying pressure followed by a pause as traders take profits and reassess, only to be followed by another strong buying wave, often exceeding previous highs. Each movement in the chart tells a story of emotions, economics, and expectations, a narrative of anticipation and strategy played out by market participants. By understanding these patterns, investors can align their actions with the underlying market sentiment, potentially positioning themselves ahead of major price movements. This isn't about guessing, it's about informed predictions based on historical data and market psychology, setting the stage for what could be a lucrative phase for silver. So if you've been considering silver as part of your portfolio, this technical insight might be the signal you need to watch closely. Next, we'll explore the broader market dynamics that add another layer to our understanding of silver's bullish outlook. Why now? The markets are reacting not just to technical signals, but also to macroeconomic pressures. We're seeing increased demand in industries like solar, where silver is indispensable. Let's unpack this a bit. Silver isn't just another commodity. It plays a critical role in various high-tech applications, particularly in photovoltaic cells for solar panels. This surge in green technology investment, driven by global pushes towards renewable energy, fundamentally supports a long-term demand increase for silver. But it's not just about industry demand. Economically, as inflation concerns continue to bubble in the backdrops of major economies, investors traditionally turn to precious metals as a hedge against the eroding value of paper currencies. This dual influence of industrial demand coupled with investment demand provides a potent catalyst for silver's price potential. Understanding this context is crucial. It's not merely a spike based on speculative trading. It's underpinned by solid, real-world uses and economic behaviors. As more economies commit to renewable energy and as inflationary pressures mount, the role of silver could shift from just a valuable metal to a strategic asset. This makes it a fascinating time for potential investors, offering not just a safety net but also growth potential. As we move forward, we'll delve deeper into the supply side of the equation to see how market deficits might further complicate or enhance this bullish scenario for silver. Stay tuned as we explore how limited supply amid soaring demand could be setting the stage for a dramatic price rally. Adding fuel to the fire, there are whispers of market deficits, where the demand for silver outstrips supply. This imbalance could spark a rapid price escalation. Let's dissect this further. Typically, a market deficit occurs when production and reserves of a commodity like silver cannot keep pace with its consumption and investment demand. Currently, several factors contribute to this tightening scenario. First, the extraction of silver is often a byproduct of mining for other metals such as lead, zinc, and copper. This means that silver supply is not just linked to its own market dynamics, but is also dependent on the production rates and economic viability of these other metals. If the mining of these primary metals slows down, silver supply inadvertently gets pinched. Secondly, there's been significant discussion around the decline in high-grade silver ore deposits, which makes the available mining processes less efficient and more costly over time. This reduction in efficiency can lead to decreased production rates, just as global demand is ramping up due to the factors we previously discussed. Moreover, strategic stockpiling by countries and industries, anticipating future shortages, can also lead to perceived scarcities in the market, driving prices up as buyers rush to secure supplies before they dwindle further. Let's not overlook investor behavior either. In times of market deficit, the investment demand for silver can increase, not just from large institutional buyers but also from individual investors who see potential for significant returns. This kind of demand further tightens the market, setting off a self-reinforcing cycle of rising prices. In our next step, we'll explore how geopolitical tensions and economic uncertainties traditionally push investors towards safe haven assets like silver, reinforcing this bullish outlook. So make sure to keep watching as we connect these dots to give you a comprehensive understanding of what's driving the silver market today. Consider the influence of geopolitical tensions and economic uncertainties. These factors traditionally push investors towards safe haven assets like silver. Throughout history, during times of geopolitical strife or economic instability, precious metals like silver have seen an uptick in demand. This isn't just a coincidence. It's a calculated move by investors seeking stability and tangible assets that can withstand political upheavals and economic downturns. Now let's delve into the current landscape. Recent escalations in global tensions, especially in regions that are crucial to the supply chains of many commodities, have investors on edge. When nations are in conflict, the continuity of supply for many commodities can be jeopardized, leading to spikes in prices due to fears of scarcity. Silver, used not only as an investment but also essential in various industrial applications, becomes even more critical under these circumstances. Furthermore, consider the economic backdrop. The world is navigating through turbulent financial waters with inflation rates climbing in many major economies. This economic pressure compels central banks to adjust monetary policies, often leading to market volatility. In response, savvy investors and hedge funds increase their allocations to silver, viewing it as a hedge against inflation and currency devaluation. Adding to the complexity, the US dollar's strength impacts commodity prices globally. A weaker dollar makes silver cheaper for holders of other currencies, potentially increasing demand. Conversely, a strong dollar could temper some of that demand, but the overarching trend remains bullish given the broader economic indicators and geopolitical climate. In our discussion, let's open a dialogue. How do you view the role of silver and other precious metals in times of uncertainty? Do you see them merely as a safety net, or do they offer a genuine growth opportunity during crisis? Share your thoughts in the comments below, and let's engage in a meaningful exchange of ideas. This exploration not only aligns with our ongoing narrative, but invites viewer interaction, fostering a deeper connection and engagement with the content. In the next segment, we will synthesize these insights, paving the way to understand how all these elements coalesce to support the thesis of a significant rise in silver prices. With all these elements at play, experts like John Rubino suggest that a price explosion in silver is not just speculation. It's based on a confluence of strong, market-driven realities. Let's unpack why this isn't just another market anomaly, but a well-supported forecast that could see silver prices reach unprecedented levels. Firstly, the technical signals we discussed earlier are not isolated incidents. They're part of a larger pattern of sustained interest and investment in silver, evidenced by the consistent demand in industrial sectors and the increasing interest from investors. These are not short-term trends. They've been building momentum over the years, solidifying silver's role not only as a safe haven but as a strategic investment. Secondly, the supply constraints we've highlighted add another layer of urgency. As mining yields diminish and production lags behind demand, the basic economic principle of scarcity comes into full effect. This isn't about market manipulation or speculative bubbles. It's about real, tangible shortages that have the potential to push prices to levels we haven't seen before. Moreover, the geopolitical and economic uncertainties that push investors towards precious metals are not abating. If anything, they are becoming more pronounced as we navigate through tumultuous times. This ongoing shift towards safe haven assets is supported by a backdrop of inflationary pressures, which traditionally bolsters the value of silver. In this next segment, we'll dive into the potential impacts of these market dynamics on silver's pricing structure and investor strategies. We're looking at what could happen if these trends continue to develop along the projected paths. So if you're considering silver as part of your investment portfolio, this upcoming analysis could provide crucial insights that might influence your decision-making process. Stay with us as we explore the potential future scenarios that could unfold from these intriguing market dynamics. This detailed breakdown ensures that the audience is well informed about the various factors contributing to the bullish outlook on silver, setting the stage for a comprehensive conclusion in the final segments of our discussion. Before we approach our climax, let's explore how the current market dynamics around silver could unfold into real-world investment strategies and future price scenarios. The narrative we constructed isn't just a collection of hypotheticals. It's grounded in ongoing market realities that signal a potentially dramatic shift in how silver is perceived and valued. As we dissected the intricate dance between supply deficits, burgeoning industrial demand, and the undying allure of silver as a financial safe haven sets a stage ripe for price escalation. Yet the question remains, how can individual investors and large institutions alike leverage this information? First, understanding the intricacies of the silver market is key. This includes monitoring not only the price movements and market news, but also the underlying economic indicators that influence these trends, such as industrial growth figures, investment trends in renewable energies, and the monetary policies of key economies. By staying informed, investors can anticipate changes rather than react to them, positioning their portfolios to benefit from potential upward trajectories. Moreover, considering diversification strategies is crucial. While silver itself presents a compelling case, integrating it as part of a broader investment strategy that includes other precious metals, equities, and perhaps even bonds can mitigate risks while capitalizing on potential gains. For example, pairing investments in silver with assets that may perform inversely to market volatilities, such as certain types of stocks or bonds, can create a balanced portfolio that withstands diverse economic conditions. Now let's talk about timing. While it's impossible to predict market tops and bottoms perfectly, understanding the cyclical nature of commodities like silver can provide clues about when to increase or decrease holdings. This cyclical understanding, combined with a keen eye on geopolitical developments and their potential impacts on markets, can guide more nuanced buying or selling strategies. In conclusion, as we reach the apex of our exploration into the potential explosive rise in silver prices, we must synthesize all the evidence and insights